Okay, we are live on another Fireside chat. We are here with Magnus Bergman from Luminar Ventures, and we just got out of a workshop with some of the Suffer 6 members and some friends from Stockholm Scale Up program. Good to have you, Magnus. Thanks for tuning in.
I'm happy to be here.
I have
Thanks for
I have
inviting
2
me.
hours. I have 2 hours with you today. Fantastic.
Not
Um,
every day we have
Not
that.
every day. Not every day. It's good to have you. Good to catch up. Do you wanna, just for those who are tuning in, do you wanna give a quick intro to who you are and what you do as an investor? And then I have lined up a bunch of questions and topics that I wanna discuss with you. So yeah, could you just give a
Yeah,
quick
I can give a
intro?
brief overview of my background. I mean, I started off as an engineer, then came into as a researcher. I did a PhD in physics and so on. It was never intention to become a professor or something like that. I started company when I did my postdoc and took on a couple of colleagues. We started a consulting company and co-founded that one parallel consulting group that became part of Icon Media Lab. I was part of the team at Icon later on that started Icon Media Lab Asia. So I really love the sort of startup journey and building things and creating new industries. And after Icon, Icon I think was the first like unicorn in Sweden, tech unicorn. And after that, I started off as a business angel, investing into more and more companies. And from 2009, as a full-time angel, there wasn't that many angels at that time, and it's not long ago. But I realized I needed to spend full time, especially after I invested into Truecaller, and then those guys, they were so good and ambitious, and I wanted to help them. So, and a couple of other companies like Prezi and then so that took all my time. And then I realized that there wasn't that many VCs that were ready to take on projects early. I mean, for Truecaller, we had to go to Finland for OpenOcean to get the first VC check. And for Prezi, we had to go to Denmark for Sunstone, and that wasn't right, I think. So that's why we started Luminar Ventures. And now the first one has 30 companies. And we now just launched our second fund. And we're doing 2 new investments, or working on 2 new investments, but we'll invest probably in like 10 companies this year.
Nice. Congrats on the fantastic journey, and thanks so much again for all the important work you've done over the years. We've known each other for 8 years, and you are by far the most helpful and active investor and supporter of the ecosystem. So I really appreciate everything you've done, and yeah, this is just the beginning. So
Yeah.
really good to have you tuned in for this fireside chat. It's a very casual conversation. I have a couple of questions and things that I want to bring up. Like first, like this is about investor expectations, and I want to know like what key tips you have for entrepreneurs who are currently fundraising. We're going to talk about what are the specifically seed investors looking for, such as yourself, common fundraising mistakes, ideal investment process, like the good mix, like the team mix. Should it be like 2 commercial founders or 1 technical founder? Like we'll talk about that. Pros and cons of accelerators, always good to talk about. The VC mentality and what it means. Also, and we'll talk about shortly about due diligence, and one thing that we didn't have time to talk about during the workshop was funding climate for 2022. We briefly touched upon that, but I think it makes sense also on a streaming context to touch a little bit on that. Does that make sense?
Sure thing. Sounds
Awesome.
like great questions. Yeah.
Yeah. So let's start with the first, the obvious ones. What key tips do you have for entrepreneurs who are currently raising money?
Yeah, to be well prepared. I think read in on how venture capital works, and read in if it's venture capital you want to reach at all. I mean, we had that in the workshop. I spent a lot of time explaining all of the different alternatives to venture capital. So I think it makes a lot of sense. We see a lot of companies coming to us, and when you start to ask questions, and sometimes it takes a while, but you get to it that it's not really a VC case. And then the unfortunate thing about that is that there are so many good alternatives, and that you can get the right investors for them. And we would be the very wrong investor. We'd be like pushing them too hard. I mean, there's no way you can make a unicorn out of this, or but it can become a great company, and you can have you can create something completely different, or have a lot of sustainability effects or whatever. But that's so be really well prepared that you're seeking the right type of investor, I would say. That's number one. And then when it comes to VC, okay, you find out, okay, we want to go to VC. Also define then the right stage of VC, because there are so many, and we are all geared very differently. And the reason being that there's a different size of the funds. I mean, our first fund was 600 million SEK, and the second fund is for starters about 600, but might be bigger. And our team has grown. So we were like 6 persons for the first fund, and Sequoia, there are thousands of people working for Sequoia, and the bigger funds. So that's an extremely big fund. So, and obviously, and in between Sequoia and ourselves, there are many other like Creandum. They are 5 times bigger than us. So they have more people, more offices, can do much more support, but they want your company to come much further, I would say, than us, because otherwise the ticket size will be too small for them, or at least like Northzone is the same. I mean, they can't go in too early. So find out the right type of VCs, and then you're ready to go. I would guess, but I guess that's most of the work, actually, to find out these things, reading on the internet, and get a free Crunchbase account, and then do a free trial for 2 weeks and download all the investors and get their emails. I don't know.
Quick hack from Magnus.
Yeah, it's a hack. So there's always a hack. I remember that.
Yeah, for sure.
And then use DocuSend so you can see how investors are reading the presentations, and always create a deck. Never contact a VC without having the deck ready, I would say, because you have attention span for everything in life, right? And you don't want to contact someone and then there's no deck, and then they will always ask for a deck. I'm sorry, but just something very, very short, and just to understand what kind of industry you're in, and if this is something for them to spend time on. I mean, we get thousands of applications, and then first thing we have to do is to know. And I'm thankful you say that I'm helpful. I always try, even if it's not something for us, I always try to help them and say, I mean, we made a list today about 11 other types of investors, and especially for early stage, there are the most alternatives for early stage. There are many more alternatives for early stage than there are for later stage, I would say. And that's we always try to help there. So have a deck ready, and or at least a small one. And
is there some key things that sort of grabs your attention faster than Because I guess you get a lot of noise, a lot of incoming
We
inquiries.
always go to the team slide.
Team slide. Okay.
You might think that it's your idea that's the best thing you have, but it's yourself and your team that's your greatest assets. That's always the case, and so it's based on your background and what you want to do, and a strong team is really the key. And you said that. I mean, how should a team look like? I mean, the balance between the commercial and the technical. I mean, a scalable tech startup or a scalable startup, any scalable startup has so much tech in it. I mean, it's crazy. And even in the beginning, it might not be that much tech, but if you're successful, it will quickly become very tech dependent. And if you're not staffed well enough from the beginning, you will hit the roof, and that will hurt.
Yeah.
Balance between tech and commercial, I would say.
That makes sense. Again, I didn't mention it, but like if you have any questions, or those who are watching, feel free to write it in the chat, and then we'll catch it, and be happy to add more questions or thoughts or comments when you chip in. One question from Jens. Hope all is well with you in Gothenburg. Where is Magnus Motsvarighet in Gothenburg? Really good question.
Well, today I don't think you should look at it like that. I mean, there's the video now with Corona. We learned how to do. We did investments without even meeting the founders now, so it's you don't.
So Magnus is saying, "I'm unique, and you don't need a Magnus in Gothenburg. Just reach out." That's what he's saying.
You shouldn't look after geography. I mean, obviously you should look for someone in Sweden, but you look for the best one in Sweden that can support the best in Sweden. But I realize it's good to have someone support you locally. But that's normally the business angel phase. I mean, investors, the best leverage of an investor works a bit different. So we have companies in Gothenburg and in Malmö as well, and we're hoping to get more outside Stockholm. But
and hopefully, like the key message in terms of us working to support the ecosystem is that the whole idea is to remove the barriers, the geographical barriers, right? You should by default have as much access to the ecosystem if you're in Gothenburg, just like you would be if you're in Stockholm. Only then I would say the ecosystem dynamics is on par where it should be. But I understand
we will help you more if you're from outside of Stockholm, because we have to help. Because there is underrepresentation. It's just like female founders. We help them if we see we help them more. That's something we decided we will do, because it works out really well. Because once you manage to get through that barrier, you're obviously an overachiever. So if you manage to break out of your own boundaries, so to say, even if it's geographically or by gender, or then that's worthwhile.
Yeah. So I would sort of translate that. So if you're a founder from a smaller city or from a minority group, there are actually benefits to like getting access, and because like from two perspectives, like you would consider them being more unique, so maybe more interesting by default, and then secondly, like you might have new perspectives on things, which is always beneficial.
I mean, especially also the drivers for we normally find that the drivers for such backgrounds are stronger, and we try to figure out and that's something we ask founders, what are your drivers, and then as I mentioned in the beginning, it's yourself. You're the biggest asset of your business, so that's super important.
Thanks, Jens, for tuning in. Let's hope we can catch up soon. Looking forward to visit Gothenburg really soon and check things out. Shout out valborgventures.com. That's Jens' new place in Gothenburg. Then we got another question from Andrew. Really good one. How do you assess a founder team that doesn't have a track record of building a successful startup in the past? What do you want to?
Yeah,
How do you want to answer that?
I mean, it really depends on what kind of startup you're building. I mean, we are supporting many founders that are, I don't know the exact statistics. I mean, normally, if you get through to a VC, you might have tried at least 1 or 2 times before, but many have not, and they might have other great backgrounds, like either like in research, like super good at machine learning or something like that, or it can be like they've been at Bain or McKinsey and as consultants, and they really dug into that area that their startup is working with, and so there are so many areas or so many backgrounds you may have. You may have a sustainability startup and you have specific reasons to do that, and so it's it can be, but it really helps. I mean, you should try. I mean, that's the thing about the startup mentality. You try, you fail, and you learn much more when you fail than when you succeed. That's my experience. So fail a couple of times, we don't see it as a negative at all.
Yep.
And
I'm guessing.
everything.
Yeah, and I'm guessing also like the reason why serial entrepreneurs, especially successful serial entrepreneurs, are so attractive is because they've previously shown that they can take the extremely rough path to success, which is because everyone who invests knows the drama, the punches that you'll take down the road, and most founders won't be able to sustain or have the stamina or the grit to go all the way. So I'm guessing that's also one of the reasons why serial entrepreneurs or at least second-time founders are more attractive for investors. Is that? Do you share that?
Yeah, I share that, because then we don't have to like explain the handles in a way. I mean, they know it, and I think when you fail, you learn much more. Even when you succeed, I mean, it can be a curse to succeed. Also, it's like I won the lotto once, but now I want to win it again, and it might not be as easy. It could be much harder, and so to get out there and try. I mean, some entrepreneurs, they do it already in school. They start projects and then you, like everyone says, it's your first job that you really get modeled and trained in that way. So, but some start late, and that's actually very common as well.
Yeah. Do you feel like let's say, because some, especially first-time founders, get really sensitive about the whole idea behind risk, right? And therefore, you feel like you have an obligation to the investors in a way, right? And like, when is it okay to say like, okay, we are not going further with this? It's okay to shut down shop, take the lessons, put it in the backpack, and then go for a new run. First question, like, how hard do you push the founders and the entrepreneurs to like test things in order to, before they make that decision? And then second question on that, can they still come to you guys afterwards, even if they have had a failure, and come and ask for money a second time?
Yeah, I mean, if the cooperation worked well, it's again, we have a great advantage of knowing them again. So we know much more about that founder and can can also adapt and complement that founder in a better way the next time around. And but of course, it would have to be assessed in the same way as we assess everything and compared. But definitely, it's very common that we see founders that have been part of projects that are more or less failing, but then become something else at the same VC. So yeah, it's definitely what I mean with okay to fail is it's totally okay. Yeah, it's about other things like being a partner with someone. I think that's important.
Yeah, you mentioned on the workshop also. I'm jumping to another topic, which is related to like the type of mentality, the VC path that I'm guessing you somehow also, the reason why you invest in the way you do is to like because of the fantastic opportunities for that company in the future, which then sort of puts them on a path to grow really fast. Do you want to, like, we talked a little bit about that on the workshop, but do you want to sort of comment on that land grabbing mentality and what it means and why that is so important in like venture capital world?
Yeah, there is this book called The Blitzscaling, which I recommend a lot, written by the LinkedIn founder. And what he says is that the difference between there's not such a big difference between Silicon Valley and the rest of the world. But at least when he wrote the book, the difference is in Silicon Valley, they know how to blitzscale. And that's how to grow really fast. And that's to deploy capital. It might be that some of your decisions are not that good, but then you can come to that market later but that's very much an attitude, that investing a lot, and it's becoming the same way now, I guess. Like we see that mentality also coming to Europe. So, and the reason behind this is that there's so much money in the system that unless you scale fast, someone else will eat your cake, right? So, and that's someone else from another ecosystem. So when we look into a company, we always try to figure out what's going on in the US and what's going on in London, Paris, Berlin, Munich. What's happening in Spain and Italy. So we start to have to look into more and more countries and seeing how well funded are they. Is there a chance for us at all? Oh, these were already funded $1 billion. Look, and they will come here soon.
Is that a good thing or a bad thing?
It could be a good thing also, because it could be that we think that they might not prioritize the Nordics. It really depends on the size of the market. It also validates the investment. So I guess the worst thing it would be that we look into an area and we see that no one has invested in this, and there's no one an explanation to that. So, but sometimes we just have to think a bit outside the box and take the risk, and anyway invest into it. But because we believe in it, it's like a blue ocean. No one has done this before, but
yep. Yeah. And what's the like? Luminar Ventures are seed investors. What's the main things you look for when you fund companies?
Yeah. But first of all, the fund mechanics have to work. So one of the first questions I ask is, how does your ownership look like? How does the cap table look like? Because if you only own a small share of the company or already been diluted, it won't work. The fund mechanics won't work for us. Or if you're, because we will invest a lot, and then eventually you will only own 1%, and you might not be interested in running the company that far. But we also look into valuations. So if the valuations are too high, we don't have the money to invest to get and we try to reach 10% at the exit stage. So it means we maybe have to reach 15 at some point. But we have the fund, the mechanics have to work out so that we have enough money to invest in enough number of companies, because we know that it's a small part of the fund that will sort of provide the upside. That's the mechanics. So that's the first thing we look at: the ownership and the valuation, how much money they're raising, and so on. So we make sure it's like an early stage investment and not a late stage, and they should really have gone to someone else, like a Series A player. So that's the first thing. And then the second one is normally is the size of the market. Where to make this to make it an interesting investment, there needs to be a really good size market. It needs to be a big industry that you're changing, and that's sometimes a bit hard to evaluate. But then we look for teams, like great teams, great backgrounds, preferably done this before, done like a similar journey, or maybe like in the management team, not serial founders, but coming from one of the successful parts of the ecosystem here in Sweden. So we're looking for many things, but I think that those are the team and the market size and that it fulfills our fund dynamics. Maybe that's the three most important.
What's the best way? We have another question coming in 1 second, but before we get there, you mentioned team twice now, and why that's important. How can I get? Let's say you initiated a conversation and you really like the team needs to pop out. How, like, is it like an executive summary where you share the team, or how do you get through the noise when you're looking at potential investments and you really have a strong team and you want to show that? What's the easiest way to do that when sharing a deck?
Yeah, you mean the contents of the deck, or like?
Yeah, exactly. Like there are like obviously 25 different templates and ideas which should be included in the seed deck. What I'm looking for here is obviously like, how can I make sure that I communicate the strength of my team in the deck?
Yeah, I mean a team slide showing the team and the previous companies they work for, education, and also I guess by that time you will have maybe a couple of angel investors or advisors, or I mean what we see, typically these teams are really good at attracting people, and that's a key denominator for us. Okay, you need to be good, but you need to be an attractor, not a repellent. So you have to attract talent, and that's the talent attractors that they grow those megacorns or decacorns or unicorns, and that's so it's not only about the team, but to show that picture. And that's super important. But also then obviously the pain and your solution and the size of the market. I think that will get you far. I think like a first contact point with the VC could be like 10 to 12 slides. So then they can judge, and the cap table. So because then they can see, okay, is that, and how much you want to raise. Because if it says 100 million, then I can only reply and say you should contact these guys.
Yeah. But what if they say we're raising 100 million and they want you to take a third of that?
No, that's our maximum investment check is 20 million. So
okay, a fifth of that then.
Then I won't reach enough ownership. That's
got it. Yeah. So that disqualifies that lead. Automatically.
Got it. If that's one the winner in my portfolio, I will only have like 1%, and then it won't help that it's a unicorn. I'm still still not the
Yeah.
fun.
Good point. Christo asks a question. Thanks for tuning in. What advice would you have for foreign founders that are moving to Sweden as to how to best establish themselves and their ideas?
Yeah, we have a lot of teams from outside, and they're from various countries: Ukraine, France, US. I mean, India. I think a great way is to use the accelerators like Sting and so on, because they will be like a contact hub for you. And then there will be a lot of international. I mean, what will you find out is everyone speaks English at an accelerator. It's because the people are coming from so diverse backgrounds, and they might have been in Sweden for a long time, but still want to do a startup. Because I think the percentage of people starting a company coming from outside is higher than the local. So that's a great way of doing it. Then also, I think, contact those founders directly. If you look, for example, in our portfolio, if you see someone from your own country, the people tend to really help out, and on LinkedIn, and then say, "Hey, I'm from France. Could we have a chat? I'm thinking about starting this up, and really like to share your experience as a startup founder." That will work for sure.
Yeah, that's a good answer. I think that if you can tap into building up on Magnus' point, like if you come from the outside, we've seen that a lot with founders coming in. Try to find concentrations and clusters of like-minded people that share your journey or your challenge, and where you can exchange network opportunity, but also inspire each other, because it could also be extremely lonely when you come from the outside. So make sure you surround yourself with optimistic people. And
and that's why when you started Sub 46, I was an angel in 2013, and the first thing I did was to move in there, because I also wanted to be there. I wanted to be there where, the ambitious people came from outside, super good. I mean, from everywhere. And the important thing is what you want to do and how much you're prepared to work for it. So that Sub 46 is also a good example. Such a place.
Thanks for the shout out on that one. And on the topic of accelerators, Christo, let me know if you are satisfied with that answer. Happy to keep on that point. But we're going to jump over to accelerators. You mentioned it briefly. It's a good opportunity, and but there is also a trade-off, right? We have Sting, we have Fast Track Malmö. There are new accelerators / incubators popping up. Many of them are like generalists, and there are like sometimes also limitations to how much help you can get. But in many cases, it's a really good way to accelerate your business, hence the name accelerator. But from your point of view, Magnus, like you invest in a lot of companies coming out of accelerators. Like what have you seen, and why do you recommend accelerators, and when does it not make sense?
Yeah, we have a very close relation to this accelerator. So and they are really keen on getting feedback on how we think what they should focus on. So for us, it's really convenient. They sort of fix things and get them right, and more investor ready than otherwise possible, I would say. And the really good ones, they are not demanding that much capital, but of course you should always be cautious about that side. But that's I see a growth of accelerators. Like Sting has really grown their operations in the last few years, and we invested in 5 Sting companies out of 31. and Antler also. I think we're up to 2.
Antler is a good thing as well.
Antler is a really and they're becoming really good at it. I mean, it takes a few iterations, and then they've become very strong, I would say. So that's a great thing. It's really exciting. We think it really helps us. We try to provide some of that by meeting entrepreneurs early, giving them advice, but we can never give as much time as these accelerators, and they also take some equity for that. So
so the trade-off, the reason why accelerators work the way they do is because when they put founders in batches, they can provide like a structured program. And by providing the batch structure and the chronological order in which type of things they want you to learn, they can have a very efficient operation. Meaning that you get a high concentration value out of it, and without them running like 2,000 people operation. And then obviously it's the trade-off of the investments or the equity that they would like. Depending on which type of accelerator, there's like this convertible, but maybe that's for another fireside chat. Let's. Do you have a couple more minutes, Magnus?
Yeah.
We have a couple of more questions popping in here. Bill, good to see you. What's the requirements of an investment? This is related to IP and software. Did the requirement change in the new fund? Bill,
we think that the first fund worked really well, but much better than we expected. So it's a bit interesting, but it's a bit the Corona effect that sort of accelerated digitization. So it went like a leap. It was a leapfrog. I mean, these last 2 years. So and that has helped us in our fund tremendously. But I think the second fund will be very similar. We're looking for scalable solutions with the ecosystem support. I mean, from some industry that we do well in Sweden or now in the Nordics, obviously, extending a bit. Great team and so on. So and tech IP. But of course, the balance. I mean, there are some companies that have only a little tech IP, but they have more of something else. So I mean, it's the total sum that makes up. But maybe the recommendation, I don't know in your case what it was, but maybe Jacob thought the most easiest fix to sort of sum up things to move the needle would be to go for a more tech, and definitely if there's no tech founder, then we definitely that's another thing. But then we would recommend to fix that first and then come back. But I guess it was on the IP side, and then it's
I think the
always
sorry to jump in. I think that the key thing here is like the specific reasons for a specific case is not always translatable to everything else. So, and I'm gonna it's always like down to a bunch of different things, whether a company gets funded or not. And Bill, hope that clarified. Another question from Patricia, who is thinking on exploring a journey within angel investments. What should Patricia do?
Yeah, you should have what I should have done, but it wasn't possible at that time. But it's a book by Jason Calacanis. Look that one up.
What's the name?
Jason, Angel Investing from $100,000 to 100 million. Jason Calacanis is one of the most successful business angels. There are others, obviously, in the US, but he was investor in Uber and many others. But he didn't really have any money either. But he was super skillful on marketing, So he managed to hustle himself into, and he managed really well. Yeah, that's the one. So and I read that, and I just so agrees with him on like everything. And what it really says is that you will have to invest into 20 companies if you want to become an angel. I mean, I know angel investors that were successful on their second investments, but it's super unlikely, I can say. I mean, if you want the probability to work out, then you have to invest in many companies. So that would mean that maybe you go into like 4 or 5 companies per year, and you work with them. Yeah, but read more in the book, and you will see how to do it.
Yeah,
I really recommend it, and I recommended it to some other people that started off as angels years ago, and they have been really successful. Some of them, so maybe
nice.
part of the book. I don't know.
Yeah. Hope that answered your question, Patricia. At least push you in the right direction. Definitely recommend you getting into angel investment for many reasons. We need more. Like there are obviously a lot of competition in venture capital and investment space in general, but the more early stage investors there are, the better terms it will be for the founders and the entrepreneurs. So yeah, so go for it. Thanks for the question. Question from Jens. Does Sub46 take equity, or are you not considering yours? No, we don't take equity. We have a membership fee. And the structure behind that is that we do those type of things. We connect you with investors instead, and we'll do that when it makes sense. And hopefully, we can help the founders navigate the investment landscape. So we are soon about to wrap up. We didn't get the chance to talk about 2022 investment climate. Let's spend a minute on that and see if there's any other incoming questions. What do you like? Obviously, the big tech players and the growth stocks have taken a lot of punches, and there's potential recession and or correction coming in the stock market and the economy in general. What do you think about the investment climate for 2022, and how does that translate for the entrepreneurs? Like, what should they think about when raising funding?
For me, for the early stage, there's no difference. I mean, we have our money to invest for years to come, and we don't, unless the number of deals coming in will reduce substantially, we will do that, and I don't see that the trend of becoming an entrepreneur will slow down. And I think the tech corrections, that's more, I think, also like maybe Web 2 is transferring into Web 3, like Facebook has reached their peak, and privacy concerns are coming in, and so on, and there are other companies that we are investing into now, Web 3 companies that are aiming to solve those concerns, and probably could take new positions. I mean, in a new web environment, the Web 3 and not the Web 2.0. I mean, it was the same, the transition from 1.0 to 2.0, and that was the emergence of these interactive platforms. And now we see a new trend shift, and that's happening. So I think it's more that than anything else. It's not that it's less important. We see that tech is hitting, every big industry now. And it's the transformation has only started. So I'm very bullish. I mean, this is
Have you talked to your colleagues, your investment colleagues? I remember when there was like just when the pandemic hit, a lot of investors starting like put a hold on their new investments and started instead protecting their existing portfolio and doing follow-up rounds and sort of spoon feeding them and so on. Is that would that happen again if there's that was the pandemic, of course, but what about like if there's an actual complete
and the reason why that happened, and that was very short, that was like from April to like 4 to 6 months, and then it sort of was a complete catch-up effect in the year after. So we had to do all the work in 2021 that we didn't do in 2020 at the end of it or the mid of it. But it was because we didn't know how big this pandemic would be, and it turned out we sort of understood that this will only accelerate things. I mean, it's going bananas, the number of users on all fronts, and obviously events can happen that have a similar impact, like another pandemic. But I think we're pretty good at that now. But it could be like other international events. It seems to be. It's very hard for me to say anything. I don't know.
So to sum up, like there will still be investments, like the investor behavior will not change. Does it mean, like, obviously if you're going through tougher times, maybe it means that you're growing slower or getting fewer customers and getting therefore less revenue and therefore shortening your runway? Is there some advice that you have in terms of for founders that want to fundraise, but maybe the recession might potentially have a negative impact on their metrics?
I could have. I mean, it's that you should not only have one VC fund, maybe 2 or 3, because if there is fatigue with one of them, you have 2 more to go to, and then they will push the third one to. I mean, that's and invest, and like spoon feeding a company like a third of the money is much easier. You can do it 3 times more than once, and so on. So it's it is, and it also increases your chances of getting the next round. Even going from 1 to 2 investors a lot, but even from 2 to 3. It's obviously a matter of dilution and so on. But so how safe you want to play it, it's up to you.
We got a question from Sid Hartz before you wrap up. Do you see a future for incubators for frontier tech in the Nordics? I'm not sure what frontier tech means, but okay. So maybe like let me see. Feel free to elaborate, Siddharth Kullar. But if I'm interpreting this, like, is there opportunity or space for additional incubators? My spontaneous answer is yes, because there are, just like investors, early stage investors, it's a sign of a mature, well-functioning ecosystem, and who knows which dynamics will work down the road, right? So new players will come in. We just seen for the last 10 years how the ecosystem have matured. Okay, here we go. Frontier tech definition is hardware, synthetic biology, and space. Thanks for clarifying.
Yeah, it's interesting. We have a very strong ecosystem for software-based, like B2B and B2C. And traditionally, we've been very strong on B2C, and now becoming better at B2B and SaaS. But it's been a bit poor on the hardware side. But there are recent initiatives on that side, and I think Things have an incubator, Sting, on hardware, so you can go to Things, and that's Sting supported, and they're really good. And I think they can do space too. Maybe not synthetic biology, but obviously an area super interesting with COVID and so on, like PCR testing, even DNA computers, and so it's all sorts of things going on. But that's why I talk about ecosystem support. I mean, you need to say, okay, what kind of knowledge do we have here in Sweden, and I think we're quite broad. So I do see accelerators. Now there are VCs for more hardware oriented, more deep tech oriented VCs, but then you need more early stage. So that would hook in very, very well, and also in biology, definitely, with all that going on with CRISPR and gene editing and stuff like that. Definitely.
Yeah, and I'm
But
guessing
not something we work with. We try to stick to our what we know. So
yeah.
we will stick to software because. But I'm hoping that I get cases that I say, "Wow, this is fantastic," but I don't know who to send it to. It's too early in hardware, and so yes.
Yeah, for sure. And maybe with new initiatives, there are also more players coming in. So this is how new verticals are introduced.
Yeah,
So
I agree with Siddharth here. So there should be more support for that. And it was only 5-6 years ago we needed more support for what we've been talking about right now. I mean, 2013 when Sub46 was founded, and there wasn't really any good VC support for software companies either. So let's hope for that to change.
for sure. Thanks for all the questions, and also many thanks, Magnus, for taking time of a busy schedule and talking to me and the ecosystem and the community. Any parting words from you for the founders out there?
I think that 2022 will be a good year. Might be things happening on the market, but that's also what's good about working privately, that I wouldn't mind the markets go down, because that will stop as everyone knows, the valuation has gone up, and that makes things more difficult in a way. I mean, especially if they suddenly go down. So it's better that they stay the same. But
A correction is healthy. That's what you're saying.
It's a healthy to hold back, and I think it's correct. I think there's a transformation coming, as I mentioned, between Web 2.0 and 3.0, and that's only the beginning that we see.
Yeah, and that's for another conversation.
Yeah.
Magnus, thanks so much for taking the time, and for those who tuned in and send in all your good questions and making this more interactive. Really appreciate it.
Thanks.
Yeah, best of luck for everyone on your fundraising endeavors, and have a great evening. Bye.
Bye, everyone. A great one.